Hello trader, welcome back to Rhythm Holdings LLC, and my name is Kingsley, and in today's video we are diving into one of the most fundamental tools of technical analysis in forex trading. By the end of this video, you will know exactly how to draw a trend line, to identify the potential entry points, and also make informed trading decisions on how to use Trendline to take trade and exit the market. So let's get started. In the episode 1 of Let's Talk Forex, we teach about the basic guide to understanding trend lines. If you've not watched that video, please, I'm begging you, try and check it out somewhere on our YouTube channel. It is one of the most performing videos on our channel currently. Yeah, so if you've not watched it, please try and then watch that video. But today we are going to talk about how you can use Trendline to identify potential entry points and also make informed trading decisions on the price side. Because as we stated in the first episode, we told you guys that Trendline is the most basic thing that you can use to make money in this forex industry. That is, if you understand how to utilize it, if you know how to draw it properly, trust me, Trendline can make you millions of dollars in this forex business. To begin this video, I will want to talk a little about what a trend line is, the types of trend lines that we have in forex trading, and then how you can even draw trend line. Even though we have it in the first episode, I don't want to stress you guys. I'm just giving you a basic understanding of this so that when we go into the video, it will not be like you are lost. Okay, now a trend line is a straight line that connects two or more price points and extend into the future to act as a line of support or resistance. Okay, so let me repeat it again. A trend line is a straight line that connects two or more price points. And not just that, but it can also be extended into the future to act as a line of support or a resistance. So now let's go to the chart and let me show you actually what we are discussing here. Okay, now this is my OD USD. You can see it here. And this is a trend line that I have on my chart. And as you can see, I gave the meaning of a trend line to be a straight line. This is a straight line on the chart that connects two or more price points and also extends into the future. Extends into the future. So let's take it like this is the first point of the market and there is nothing here. So we've extended this trend line into the future. So now that we've connected the first point, the second point. So we've gotten two or more price points. And now this trend line has been extended into the future. And the market, this is the first touch, which makes it the support. This is the second support. So now let's see what the market will do as we've extended the trend line into the future to serve as a support. Because now it is helping the market, or this trend line here is serving as a support to the market. So you can see that when the market got here, it touched it again because we've extended it into the future. The market traded, and then came back. And when the market touched the trend line here, look at what it did. It bounced the market up here again. So this higher high was broken and then gave us another higher high here. And later, what did the market do? It break out of this trend line, came up and try retesting it, and then the market got consolidated here. So you can see that there was a touch here, and a touch here. Do you understand what I mean? When the market touched here and then gave us this second touch, we did not know what will happen again. So what we needed to do, give me a second, was to connect this low point here into the future and then look at what the market will do again when it touches this trend line. And indeed, when the market touched this trend line, it gave us this strong pin bar which signify buying pressure. So this signifies that Trendline plays a perfect role when it comes to forex trading. And as I stated earlier, if you know how to connect the dots very well, it will help you to identify the direction of the market. So now let's talk about the types of Trendline in forex trading. And in forex trading, we have 3 types of Trendline. We have an uptrend Trendline, we have a downtrend Trendline, and then we have an horizontal Trendline. So an uptrend Trendline, what it does is that it connects 2 or more lows and then what slopes upward, indicating that demand is increasing and price is expected to go high. That is an uptrend Trendline. What it does is that it connects 2 or more lows and then it also slopes upwards. And also it indicates to you, the trader, that demand is increasing and also price is expected to continue rising. So now let's use the same chart that I used to illustrate to you how to draw a trend line to explain an uptrend trend line. So now this is the chart again, and you can see that these are the lows of this bullish market, because this is the lower, this is the higher low, higher high, higher low. We have another higher high here, another higher low here, and then another higher high here. So in an uptrend line, you will connect the lows here. That is what you will connect them together to get an uptrend line. So you will begin to look at where the market bounced. It is where the market bounced, that is the lows from where the market was bouncing. That is where you do connect your trend line. So this is a low, it pushes the market up like this, and the market came down like this again. I hope you can see. So when the market got here, what did it do? It bounced again. So it is this low that you will connect to this low here. So now we've connected this low together here again like this, and what we need to do is to extend this into the future to see what the market will do again when it gets here. So when the market traded from here to here to here to here, what did it do? This is the trend line here. And when the market got here, it touched the trend line, this low again, and it bounced up again. And you can also see that this trend line is sloping upwards. I hope you can see it. Let me zoom out a little bit so that you can clearly see what I'm trying to show you. Let me zoom out. Okay. So now you can clearly see that this trend line is sloping upwards like this. And it is also indicating to us that price is continuing going higher. And also a downtrend line connects 2 or more highs, and it's also sloped downwards, and also it indicating that supply is increasing. And as supply is increasing, you, the trader, should also expect more falling. So now let's go to the chart again and let me show you what I mean by this. This is the same AUD/USD that we are using, and you can see that we have the lower high here, we have a lower low here, a lower high here, and another lower low here. So now let's connect these lows together and let's see if the trend line can fit them perfectly. Come here, take your trend line, connect them like this, and you can see that we have a perfect touches on this trend line. You can see that the trend started from here. This is the lower high, the lower low, the lower high again, and then the lower low. And you can also see that This trend line is what's trending down, going down. And it also indicates to you, the trader, that look, the market is falling. It started from the top here and it is falling to the ground, or the market is what? Crashing. So we had a breakout of the trend line here, and then what? The market came back to retest, and then boom, the market began doing its own thing over here, and uptrend began here again. So now I believe you understand the types of trend lines that we have in forex trading. Now you understand what a trend line is in forex trading. Now let's move on to the horizontal trend line. Now the horizontal trend line is something like, let me delete this ones on the chart. I just want us to have a clean chart so that you best understand what I'm trying to teach you here. Yes. Okay, so this is gold. This is gold XAU USD. And you can see that the market has been ranging here for a very long time, or for a while now. We are on the 30-minute time frame on the gold chart. Okay, now how can we use a trend line to identify the support and resistance on this trending chart? Okay, what you need is to come here, take your horizontal line, and connect the points here, the high points and the low points here in the market. So now draw in like this, look for the points, come down, connect them together. So now you are looking for where the turning point was, did really happen on the market. And as you can see, after the market break out of this structure, it came back, retested several times, bounced down again, came back, retested again, bounced down again, and until it came up here, break out of it, retest, and then what? Came back into the zone again. So now we have first touch here, multiple touches here, and this is where the market break out of this initial support zone for it to be turned into a resistance zone. So now we've gotten our first point in this ranging market. So this is the resistance zone of this ranging market. Come back again and then take your horizontal line again, look out for the point down here, then place your horizontal line again. Let me deepen the horizontal line a little bit so that you guys will catch what I'm trying to teach you. Okay, I think this will do. That will do. Let's come here. This will also do. Okay, great. So you can see that when the market break out of this initial support zone, this is where the market got and then gave us a turning point here. Touch it here, came down, touch here again, went up, touch here, and then gave us this beautiful double down here. The market gave us a good buy here, came, retested again, bounce off a level, and then what? Drop. I think this here might be a news or something. Drop deep down here, and then the market begin going up again. So this is a ranging market, and as stated earlier, the only way to trade a ranging market is to use a trend line to identify your supports and then your resistance zone. If you want to draw a perfect trend line, you need to identify these three things. If you want to really draw a perfect trend line, what you need to do is to first identify the trend, your time frame, and then locate your point. These are the three things that can help you as the trader to find a perfect entry, because you can't trade against the trend. Let's say this market, let me go back. So let's say this Audi USD market here is trending up like this. You can trade the pullbacks, but what I will advise you to do is to rather trade with the trend. So imagine you've bought here, or imagine when the market got here, you entered a buy position here, and you decided to hold it. to the all-time what resistance zone. You bought it from here. Imagine the money that you will be making whilst you are riding this trend. All that you need to do is to know the trend and then trade with the trend. Don't try to trade against the trend. Let's say you bought the market was trying to come down because you saw this bearish engulfing candlestick here. Let me zoom in a little bit. You saw this bearish engulfing candlestick, you feel like, oh, the market will sell to this zone, and then you will short the market here. Your stop loss will be somewhere here above this highs here, and the market gave you, yes, a good sell here, and you are still anticipating the market to drop more down. What did the market do? When the market got here and reversed, came back here, oh, it will still go down, touch here, and boom. You will be out of this market before you even realize, and you will be losing money. So as soon as you draw your trend line and realize that the trend is pointing upwards, that is the market telling you that, look, hey, I am going up. And you will need to do your top-down analysis to understand the trend of the market and where the market is also going, and trade according to the trend of the market, not against the trend. If you are trading according to the trend of the market, that is where a trend line will be of great support to the trade that you are doing. You enter the market here, so you can hold this market from here down here to this trend line breaks, and then you see a clear sell. Then you will leave the market and then take the money that the market has given to you. So to move on, you also need to know your time frames. Understand your time frames. If you are a scalper, what time frame are you going to use to do your analysis, and what time frame are you going to use for your entry? If you are a day trader, the same. A position trader, the same. Intraday trader, the same. You need to know the time frames that you will be using to do your analysis, or the time frame you will use to understand the trend of the market, the time frame that you will use to identify the move or the trend of the market, and then the time frame that you will use to do what? Enter the market. So you will need to choose an appropriate time frame for your trading strategy. So if you're a day trader, shorter time frames, that is 5 minutes or 15 minutes, might be okay. You use the 15 minutes for your analysis. You zoom down to the 5 minutes, and then you will get your entry. Whilst a swing trader might also use the daily or the weekly chart for their analysis, and then maybe the 4 hour for your entry. Some move down to the 1 hour for their entries. So now the first thing that I'll talk about is trading the bounce. Now let's move to the chart so that I can best describe what I'm trying to teach you guys, or I can best tell you guys how you can use Trendline to enter trades on this market. So now what I'm going to talk about is the trading the bounce. That is on the what do you call it? That is on the trend line. You will only have to do what? Trade the bounce. Be patient. Look at what the market will be doing as soon as it gets to the trend line, and that is how you can best do what? Enter trade. Don't just enter trade because you think that the market has sold down and now it is on the trend line. So as soon as it gets to the trend line, I am entering the trade and it will definitely go in my favor. It doesn't work like that, because when you look here, you realize that when the market got to this trend line, it did not bounce off. It broke out of this trend line. And so imagine you were observing this market and you say that, oh, because this market has gotten here, I know that because it bounced off here, this trend line will surely hold the market and it will bounce off. So let me enter as soon as what? As soon as the market gets here. It will shock you that you will enter here, place your stop loss maybe here, somewhere here, thinking that you are protecting it because there is a bounce here, there is a bounce here, and definitely it's going to be a bounce. You will be shocked. Look at the selling pressure here. So imagine you enter the market here, and then your stop loss is somewhere here. The market will take you out. So what you will need as a trader is to wait for the bounce on the trend line. What do I mean by the bounce? When this is the first touch, this is the second touch. Let me adjust it properly so that you guys will know the bounce. Okay, so now this is the bounce. Okay, when the market was coming down, look at the selling pressure. We had this strong selling pressure, another strong selling pressure. But when it was getting down, you can see that we have this strong selling pressure here, this strong selling pressure here. But when it was getting to this zone, you can see that the candlesticks were what? The selling pressures were reducing. And also, when it got to the zone here, let me show you something. It gave us what? This pin bar. And right after the pin bar on a trend line, it gave us this another bearish candlestick here. Then we have this bullish candlestick which engulfs this bearish candlestick. When the market is trending up, the only thing that you will need to look out for, this is a bullish type of entry that we are looking at. Forgive me, I did not indicate it earlier on. This is a bullish kind of entry that we are currently looking at. So what I'm trying to tell you that when the market is trending up and you have your trend line drawn and there is a touch or there is a reaction going on or happening on your chart or on your trend line, what you will need to do is to look out for these three things: either a morning star, a pin bar, or a bullish engulfing candle. But here the market bounced here and gave us this pin bar and then traded down to give us this bearish candlesticks. Now we have this bullish candle engulfing this bearish candle. So this together confluences what? A bullish engulfing candlestick. Wait for the opening of the next candle. So right after the close of this bullish candlestick, we had another bullish candle here, confirming that the market is what? Trading up. Sometimes the market will come down, retest it again, and then go up. But when you are beginning to see the pressure, the buying pressure comes in, maybe you can decide to enter right after the close of this green candle that gave the bullish engulfing on the 4-hour time frame or on the 1 hour time frame. And as stated, if you are scalping on the 5 minute, as soon as you see your bullish engulfing candlestick on a trend line, try to also enter the market after the close of that candlestick or of that bullish candlestick that engulfed the bearish candlestick. So imagine if you have entered the trade somewhere here, let me okay, so imagine you've entered the market somewhere here. Where will your stop loss be? Your stop loss is going to be right under that zone, that higher low. This higher low, this is where your stop loss is going to be. This is where your stop loss is going to be. And where will your take profit be? Your take profit is going to be at the immediate swing high here. So look at the buying pressure. As soon as the market touched this trend line and gave us this bullish engulfing candlestick, you enter the market right after the close of that bullish engulfing candlestick. And look at how the market traded up. When it hits here, you are out. Imagine the risk to reward ratio here. Now let's move on to another example. This is also another example. The market was trading downwards after hitting this zone here. It was trading downwards like this. And look at what the market did as soon as it touched the trend line. It bounced off. So I told you guys that the 3 candlestick patterns that I personally use to enter trade on an uptrend market on a trend line is the bullish engulfing candle, the morning star, and then the pin bar. So now you see this is a good example of a pin bar. When the market got here, what did it do? The buyers immediately moved the market up like this, and the market closed here. So this pin bar here, the market could have decided to do what? To trade down and then retest it again, but it did not happen. So me personally, as soon as I see this and then the close of this candlestick, I will look for a good confirmation here. I will look for a good confirmation here. Right after the close of this pin bar, I will enter my markets, and here too, my entry on this chart will be somewhere here. My stop loss will be right under the wick of this pin bar, and my TP will be at the next resistance level. So now let's move on the downtrend so that I can also give you an example on how you can enter a trade. So this is still the AUD charts, and here you can see that the market is trending. The market, and here you can see that the market is trending down like this. So now let's draw our trend line to identify or to know how to use the trend line to take a trade when the market is also trending down like this. Okay, like this. So now you can see that we have a lot of touches on this trend line. This is the lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So the market breakout of this structure gave us another retest here, and then begin consolidating. So now how can you as a trader be able to sell the market here, and then here before the turning point over here? We did what happened? And as I stated in the uptrend example, I'm going to also make it clear to you over here. Do not buy the market when the market is going down. I hope you understand what I mean. Do not buy the market when the market is trending down, because you will be losing more money. That is why you always need to identify the trend of the market even before you make any decision concerning the market or concerning your buying and concerning your selling. You need to know how the market is moving. Is the market really going down? Is the market really going up? This is the only way that you can best make meaningful decisions in this trading business. Otherwise, you will always be losing money, and then it will make you think that this business or this trading thing is not even for you. But it is not what the market is doing to you, but it is what you are doing to yourself. You are not being patient enough to understand the trend of the market. So anytime you will see a green candle, you buy, and anytime you see a red candle, you will sell. This is not how this business is done. First, you need to be psychological about it and be very technical about it. So you can see that the market is really going down. How can me as a trader or a newbie in this business enter a trade by using this trend line? Okay, so let me zoom in a little bit and show you guys something here. You can see that the market gave us a first touch here. So this is where the trend started. So when the market broke out of this structure, what did it do? It began pulling back again till it got here. And there was, I believe this will be a news. And there was this strong indecision candlestick. And look at something that the market was doing here. You can see that as it was buying up gradually, as soon as it was getting to the trend line, the buying pressure began to reduce. And now there is a lot of indecision candles here, meaning the buyers and the sellers are in the tug of war here, not knowing who is to take control. The buyers are trying to push it up small, and the sellers are trying to tell them that, look, we are here. We also need to push the market down. because the market is what getting close to a trend line. As soon as you see this rejection here, please let me delete this and show you something. Take your trend line from this point. This is a channel, forgive me. Take your trend line from this point, move it. You can even move it to this. This might be even the fake out. Move it to this zone here, then leave it like this. Look at what will be happening on the chart. And look at what will be happening on the chart. So you can see that as soon as the market got to this, or as soon as it touched this trend line, it bounced off. And then try to buy up again, give us this indecision candle and this strong bearish candlestick pattern. So, and then give us this strong bearish candlestick. So now we have a green candle, an indecision candle, and then a strong bearish candlestick here. As soon as you see a bearish engulfing candle on a chart like this, do not joke with it. Trust me, do not joke with it. So me, if I'm to be on this chart, my entry will be here, somewhere here. The close and opening of this candlestick here, this is where my entry will be. My stop loss will be right above this candlestick, because I will not expect the market to trade up to this zone again. Stop loss will be here. Then look left and then draw. Look left and look out for the immediate market structure that can resist or that can push this market up again. So here will be my TP, because we have a support here, came back here, bounced so many times. So this zone here would have been my TP. Personally, this zone here would have been my TP. Yeah, this zone here would have been my TP. So let's look at the second example over here. So you can see that right after this long sell here, the market began pulling back again into the zone. And when it touched the trend line here, I have other confluence that I use to enter my trade. I have the counter trend line break there. I have the counter trend line where I will draw my counter trend line and tell myself that, look, if this counter trend line gets invalidated, I will surely enter the market. Yeah, so let's say I draw my counter trend line from here to this zone like this, because I can see that there was a lot of reaction over here. So I have my counter trend line, and now the counter trend line is helping me to know what the market is doing here. You see that when you can see that this counter trend line here kept pushing the market up. So for me, for instance, right after the break of this counter trend line here, I am convinced that this market will sell. My entry will be here, my stop loss will be above here. Look left again like this. Look left. Identify the potential reversal zone. This will be my potential reversal zone, because I already have a horizontal line here. And then my TP will be on this zone here. And look at how the market dropped. Look at how the market dropped. Straight 1, 2, 3 candlesticks in a 4-hour time frame. You are out of the market. So family, this is Rhythm Holdings LLC. Remember to subscribe to the YouTube channel. Remember to hit on the post notification button. So this is how I personally use trend lines to enter trade on the price chart. Thank you very much for watching this video. My name is Kingsley. Please do not forget to subscribe to this channel so that the community can grow and others too can benefit from this very particular video that you just watched. So don't forget to hit on the post notification button so that anytime we post a video, you will be the first person to get a notification.